Welcome to today's web lesson. Our topic is accumulation and distribution. In part 1, we're going to cover the basics as they pertain to IBD. CAN-SLIM is simply high probability of accumulation. Ask yourself, which companies are most likely to be accumulated by institutions? Those with strong EPS and sales, or those with weak ones? CAN-SLIM is just an acronym to help us find stocks that will most likely be in strong demand by institutional buyers. First of all, why do we look at IBD? What are we looking for? In everything that we do, we're searching out for signs of accumulation and distribution, whether it's in the general market, sectors, specific industry groups, or individual stocks. Remember, 3 out of 4 stocks will follow the general market. So the first place we're going to look at for accumulation and distribution is the general market itself. In the paper, usually right around the big picture, there's a feature called What's the Market Trend? And it will have several different charts. You'll notice that there's an accumulation distribution rating for the S&P 500, the NASDAQ, and the Dow Jones Industrial. An A is the best rating, meaning that the market's under heavy accumulation. E is the worst, which means there's intense selling. We also like to look at the IBD Mutual Fund Index and see how that's doing. Another feature in the paper that we can look at to get a better idea of how the general market is doing is the NYSE Composite. We want to see how many stocks are above their 200-day moving average. In this example, 75% of stocks on the NYSE are above their 200-day moving average price line. Additionally, you can find accumulation and distribution in IBD sector leaders and the IBD Smart NYSE and NASDAQ tables. It gives you information on how the sectors are doing and how the sector leaders are behaving. It's really quite simple. When you're looking at the tables, you can just see what the daily change was. Was it a large percentage move up or a large percentage move down? There's also information to the right that gives you the year-to-date total. If last week you noticed that there were 15 sector leaders listed, but this week there's only 4, that gives you a clear indication that recently the market has weakened. You will also find industry group accumulation and distribution information in the IBD paper. You can quickly find which industry groups are in the top 40 and the bottom 40. When reviewing this feature, you'll notice that they give you this week's industry group rank, 3 weeks ago, and 6 weeks ago. What you want to see is acceleration. You want to see the industry group moving up in the ranks. This is medical and generic drugs. 6 weeks ago, its rank was 41. 3 weeks ago, 34. This week, it's 8. It's obviously accelerating, which is a sign of strength. Here's mining. It's also accelerating. It went from 60 to 57 to 14. The best rating is 1, and the worst rating is 197. If you have MarketSmith, you can export data and create a simple Excel worksheet to track industry group progression. Here's an example of one that I did. IBD has an accumulation distribution rating system. It tracks the relative degree of institutional buying, which is accumulation, and institutional selling, which is distribution, in any given stock over the last 13 weeks. It's updated daily, and stocks are rated on a scale of A to E. A is heavy buying, and E is heavy selling. In the IBD 50, Big Cap 20, and Week in Review, which you find in the paper, you'll see they all come with these little mini chartlets. In them, you can find accumulation and distribution ratings, as well as supply and demand ratings. Let's take a minute to look at how the supply and demand rating works. 1 is the worst possible rating, and 99 is the best. If a stock has a 1, it means it's in the bottom 1% of all stocks. If it has a 99, it means it's in the top 1% of all stocks. That a high number of shares that are out in the market are changing hands. You can use the rating to get a sense of how powerful a breakout is. It also indicates the stock's volatility. It doesn't tell you if there's accumulation or distribution in the stock. In other words, a stock could have an accumulation distribution rating of E, which is the worst possible rating, but it could still be seeing a lot of selling. And because it's seeing a lot of selling, the supply-demand rating could be high. A high rating indicates big turnover and intense trading. It gives you a sense of strength behind a sell-off or a breakout. And keep in mind, the supply-demand rating could remain high even if the stock is sinking. This rating is just one more component of an investor's overall due diligence in a stock. We see by the accumulation distribution rating of C- that it's under slight accumulation. From the supply-demand rating, we see that a high number of shares are exchanging hands. Another incredibly helpful tool is the relative strength line and the relative strength rating. Both can be a powerful and reliable sign of accumulation. Let's look at the relative strength rating. Here it's 97. Remember, 1 is the worst and 99 is the best, so this stock is doing pretty well. Also, we want to look at the line itself. When the line is pointing up, that's a sign of strength. When it's pointing down, it's a sign of weakness. You can also find this information in IBD's mini charts. One of the most important signs of accumulation and distribution is volume. When you see a breakout or a breakdown accompanied by high volume, that increases the probability that the directional move most likely will continue. You want to look at the number of up days versus the number of down days. If you have MarketSmith or another service where you can get the up-down volume ratio, you should look at it. Anything over 1.2 implies a positive demand for the stock. When trying to determine if the stock is being accumulated or not, you like to see large clusters of upside volume. You like to see volume greater than the 50-day moving average. You also like to see stair-stepping volume, where the volume up is higher and higher and higher day to day. Let's look at some signs of accumulation in a base. It's usually best seen on a weekly chart. Stocks that are rising in above average weekly volume show signs of accumulation and demand. When a stock is rising in price on above average weekly volume, that's a sign of accumulation. You definitely want more up weeks than you do down weeks. Whenever you see 5 to 8 consecutive weekly gains, even if it's in below average volume, that points to accumulation. You'd like to see tight and orderly price action. You want to see strong closes. You want to see price close high in the weekly range because that's a sign of accumulation. Sometimes a down week can even be a sign of accumulation if the stock closes in the upper 60% of the range. And that can be a sign of strength. When you see price gapping up within a base, that can be a sign of accumulation. And when the volume is quiet at the bottom of a base, that can also be a positive sign. It may not be accumulation, but it points to an absence of distribution. It can give you a hint that maybe the sellers are becoming exhausted. The goal in looking at a chart is to be able to identify signs of accumulation and distribution by institutional players. How can we do that? We want to look at price and volume action in relation to each other. First, we'll zoom in on volume. In this example, we're using Crocs. As you can see, it had a 2-year run up. It went from a stage 1 base with a pivot of $8 to a high of $32.47. That's a 305% run up. When you look at a chart, take a quick glance and review all the volume. In this instance, you can see that there are more down weeks than up weeks. There's stair-stepping volume, where it moves higher from week to week. You also have above average volume. That's a clear sign of institutional selling. When you look at the history of this run up, and you review the volume that accompanies it, you can see there are more up weeks than down weeks. That in more than one instance, upside volume is above average. You also have some signs of stair-stepping volume throughout the base. After it forms this 4-stage base, it makes one more nice run up. It starts to consolidate again, giving the appearance that it might be trying to form another base. But as we all know, most late-stage bases fail, and so does this one. To spot signs of distribution, you want to look for a change in character in the price and volume action of the stock. Here we have a huge 1-day decline. It also closed at the bottom of the range and came in huge above average downside volume. Here's a close-up. You can see the volume. You can see the close, and you can see the tremendous size of this day's range. When you see something like that, it's a sign of distribution, and you want to become defensive. But were there signs before this big 1-day loss that could have warned you that it was time to lock in gains? The answer is yes. When you look at this run-up, you can see that the price action is pretty tight. As it reaches its peak, though, volatility and price swings start to increase. So there are several signs here that can tell you that distribution is just around the corner. First, the run has lasted a long time. It's been over 2 years. Second, it's had a huge run up, making over 300%. Third, it's forming late-stage bases. Fourth, you're starting to see increased volatility in the form of wide, loose, sloppy price action and price swings. Last, you can see that downside volume is starting to increase in frequency and in severity. You also have stair-stepping downside volume. And the final nail in the coffin is this severe pullback that closes near the bottom of the range on the biggest volume in over a year. Let's take a quick look at Jazz Pharmaceuticals. It also had a great run up. When it broke out, it was on huge volume. It had a wide range bar to the upside and closed in the top part of the day's range. It made this nice run up. Then the market began to decline. In the days that followed, it fell below the 50-day moving average and began to close at the bottom of the day's range, which just goes to show you that no matter how good a stock is, it will be affected by a general market decline. You'll also notice this cluster of downside volume that came in an above average size and also had stair-stepping qualities. You might be inclined to ask, is there any way I could have seen this distribution coming? And the answer is yes, by reading IBD's big picture daily and looking at what's the market trend. You can get a clear sense of what's going on in the market and whether you should be investing aggressively or taking defensive action. Here are a few examples. You want to look at the market, the sectors and the industry groups. Are they accelerating or decelerating? Is there evidence of accumulation or distribution? Is there strong demand? You can look at sentiment indicators. You can look to see how many stocks are above the NYSE 200-day moving average. You can look at the IBD big picture and smart tables. You can look at individual stocks. You can look at the accumulation distribution rating or the supply-demand rating. You can check to see if the relative strength line is moving up into new highs, and you can also look to see what the relative strength rating is. Is the stock near new highs, or is it consolidating near new highs? Is the stock going sideways or up during a market correction while all the other stocks fall? Well, that can be a sign of accumulation and strength. When you look at fund ownership, is it increasing? How's volatility? Is price action tight and orderly, or is it loose and sloppy and wide? And also be sure to check the mini chart comments. You can find a lot of good information about the stock in the little blurb that they write at the bottom. We'll go beyond the basics for just a minute and look specifically at price action. In general, any close that is in the upper half of the day's range is considered a positive sign or a sign of support. Even if it's a down day and it closes in the upper 60% of the day's range, that can be a sign of support or accumulation. I have greater conviction in the close and the price move when it closes in the upper 75% of the day's range, but IBD states 60% or higher. But you also have to take that close in context of the general market and what's going on with the stock. So even if a stock does close in the upper 60% on a down day, if it's because of a scandal or an earnings miss or a downgrade or something of that nature, you can pretty much expect that it will continue to fall in the days that follow, and you need to take defensive action, especially if your stock is flashing any kind of sell signals. If you're anything like me, when you look at a stock chart like this, you want to ask yourself, how could you know that it was going to make this big run up or make this big crash down? You want to ask yourself, how could I know that it was going to crash here? Well, first of all, you have to look at the whole run. From $10.63 to $34.52, it was a run. It ran up 224% from here all the way up to here. Now that's a big run. And in that entire time, it only had 4 down weeks in 7 months. That's pretty amazing. So if you think logically, you've got to know that a stock doesn't go up forever, and a 200% run is pretty significant, and at some point it's going to pull back. You'll notice that a week prior to the plunge, that price closed in the lower 37% of the range. It was on large above average volume. What followed was a 19% correction in Jazz as the general market corrected. After the correction was over, Jazz continued its move up, and it eventually hit $176 in February of 2014. The CanSlim system focuses on stocks with traits that institutions will most likely want to accumulate. Signs of accumulation and distribution can be seen in the general market, industry groups, and individual stocks. Strong volume and strong relative strength are 2 of the most powerful signs of accumulation. You want to buy stocks with CanSlim traits that also have strong relative strength, and you want to do it when the general market is under accumulation. You want to select those stocks from leading sectors, top or accelerating industry groups. You want to be breaking out of proper early stage bases that show constructive price action, and you want them to break out on big volume. When you do this, you're making a high probability trade. Remember to pay attention to the extent and the time of the run. How many months has it been moving up? How big of a percent gain have I got? What stage base was it? These are all very important things that can help you determine when it might be time to start to consider taking some profits. Learn how to read price and volume action on a chart. Tight versus sloppy price action, a support day versus a distribution days. These things are important because when you look at your stock at the end of every day, you need to be able to develop a general sense about the health of your stock and the health of the market. Lastly, remember The IBD paper, Investors.com, and MarketSmith all have many tools that can help you assess accumulation and distribution. So take advantage of them and use them to help you pick winning stocks and secure your profits.